Real Estate and Mortgage Show, your go-to spot for everything home buying, selling, and financing on News Talk 580 CFRA.
Welcome back to the show, everybody. If you have a question, make sure head over to realestateandmortgageshow.com, submit it there, and Frank and Paul will answer it as quick as they can, and we'll read it on air on the next show.
And you know what's nice, Greg, is a lot of times when you say that, even when we're on air, the questions are coming in, which is awesome. So you don't have to wait till after the show. You want to pump in a question now? Pump in a question.
And apologies in advance to anybody that sends one during the show. When we get into our third segment here, it's sometimes really hard to fit them in, but we will get them in on the next episode for sure.
Episode. Yep. I love what he says.
Episode.
We're not a sitcom here, Greg. You know, but we can.
I don't know. We laugh a lot. There's a good laugh track on this show.
There is some good banter.
I think we are an episode.
Frank, I actually got that this week too, and we talked about this when Frank and I first started this show. We're like, how long can we talk about real estate and mortgages? And I was talking to someone this week, and I said, yeah, we're this in 2026 we're going to be at our 19th year doing this show. And the person said, you know what? Not only are you guys super informative and you know what you're talking about and you're the leaders in the industry, but you guys are funny, man. And I love how you and Frank just rip on each other. Do you actually like Frank? I said, I love Frank, but I love ripping on him even more.
Yeah. But that's with our, one of my best friends had his birthday a week ago. And, we talked about the fact that the banter that we have is genuine and the love for each other is genuine because we do take these shots at each other. Yeah. And that's what true friendship is. You can tell it's true friendship when you can get away with that stuff and know that the person's not offended because we're just joking.
But the other thing we don't do, Frank, is pump our chests and say, we're the best, we're the best, we're the best. We literally say, here's some content. Hope that helps you, everyone.
Yeah. And if you have questions,
call us.
Ask.
Yeah.
All right. So
questions? No? Were you going to read a question that we
No, we're not. No.
We've had quite a few of them over the last 3 weeks, 4 weeks, ever since we've really started to push the questions.
Oh, for sure.
So many of them come in, and like I said, I mean, I'm impressed at the quality of the questions that are coming in these days.
Well, I know we had one. I think maybe was it last week or the week before? I can't remember. It doesn't matter. The first-time homebuyer credit. That was a big announcement this year that came out from the government in terms of
You mean the GST?
The GST, yeah. Sorry, yeah.
Yeah. So it's now it's almost passed, right? We're just waiting for royal assent, and then it's passed. We're just waiting to see. So obviously, the 5% GST is what was first proposed
by the feds.
Yep. And then the Ontario government came back and said, well, you know what? We're going to jump on board and another 8%, and now we're at 13%. So there's a very, very good chance that it's going to happen. But it's not going to happen until 2026, and they're not seated until February. So it's probably going to happen in February of 2026. And first-time home buyers for new builds will most likely be getting 13% off their purchase, which is unbelievable.
Now, here's the problem, to me, is that it doesn't go into effect until it goes into effect. If you sign a purchase agreement beforehand, apparently
your grandfather.
They're not going to no. Apparently, I'm reading they're not going to honor it, so it has to. They're going to do it from the date that you sign it. So I'm hoping that changes because I agree with you, Paul. It should be grandfathered based on your closing date, whenever your closing date is. But there's word out there where they're waiting until it passes, and then only agreements from that day on will count. So
that's
again, we had the same thing.
Yeah.
I know, but that's what you hear, right? Yeah. You hear conflicting stories all the time.
I know they brought this out I think it's May 27th or something like that. So what I've heard is it's retroactive to May 27th. What happens, though? I mean, what if you've already moved in?
What if you close?
Is the government just going to kick you back 13% of that purchase? Who knows? But listen, it's just great news. It's great news. And in the prediction show next week, I will be talking about this because it's going to make that segment of the market very, very good.
Well, that was going to be builders pass it back, though.
Right.
That's going to be the question. Are builders passing all of it back, or are they going to say, they're going to get 13. Let's keep 3. We'll do 10 maybe, or we'll do 8. Right?
I know.
I hope not.
I know the builder I represent, Clement Homes. Charles is 100% passing up the 13, passing back the 13%.
Good. I hope every builder does.
That's good practice. That's good practice, and I'm excited by it though because it's first of all, there's so many things for first-time home buyers now that are allowing them to get back in the market. And the worst part is when the prices went insane. The rates went insane. First-time home buyers were dead. Like they weren't coming back into the market, and they were all going into rentals, and it was just terrible for our market because we know a third of our market is first-time home buyers.
First-time buyer pool.
And if first-time home buyers don't jump into the market, what happens to the move-up buyers? They can't move. And then what happens to the downsizers? They can't move because the move-out buyers aren't moving there. So we need first-time home buyers back. They're starting to come back. This will push them back. Like, this will be unbelievable. It will help the new home market for sure rather than the resale market. But listen, someone buys a new home, eventually they become a resale, right? So
100%.
I think it's going to be great. I'm very happy that they did this. It's literally at the last stage right now, which is exciting. But because of Christmas and because of, the new year and stuff like that, it's not happening until February. And will it happen in February? Most likely, but they could delay it. But I do believe it's 99% happening in February.
Well, so as you mentioned, they initially announced that in May of 2025 this year.
Yeah.
Do you think that held some of the first-time buyers on the sideline, like them waiting for that to get passed and through, hoping that it would get done quicker?
It might have, but they also came out very early and said, don't worry, it's retroactive to May. But the guidelines were so murky that we weren't we weren't sure. Like, if you close, what happens if you close? Like, are you getting that money back somehow? Is the government kicking you back that 13%? Is the builder kicking you back that 13%? So it was so
there were so many questions right when it
there were so many questions. But the good news is, if you were sitting on the sidelines, I would not be sitting on the sidelines. Get into the market. It's going to happen. I promise you, it's going to happen. And if you're buying a resale, great. But if you're buying a new build and you're a first-time home buyer, you're going to save a whack of money. Like, do the math on a $500,000 or $600,000 townhome. It's a lot of money. It's a ton of money.
13%, yeah.
13% is a ton of money. That gets you into a market well below market value. And, it's a great program. They came out with it this year. It's going to be stamped in 2026, and which could make 2026 a very strong year.
And we don't know what the terms are on it, because do we use for qualifying? If somebody's getting the house
that
for
was
$600,
my question.
How
does this affect qualifying?
Yeah, because we don't know yet, right? I mean, these are the things that they need to pass down to us, which is, so now it's a $600,000 home. Or is the client qualifying on $600,000 or $600,000, 13%? My math tells me that's $78,000. Therefore, now we're down to $522,000. Are they qualifying on $522,000? Or $600,000, because that's a huge difference in qualifying.
For those of
massive.
For those of you who don't know, Frank does have his calculator in front of him.
I do not.
He didn't just pull that number out of his. You know what?
No,
he has a big, and it's a big calculator because he can hardly see, so it's a big one.
No, that's me.
No, that's me.
That's you with the glasses. You don't see any glasses on me. So.
I'll tell you what though. I am farsighted, which means I can't see close. Frank's far away. I wish I was the opposite, so I didn't have to see Frank,
Well, I'm looking at your clone, apparently. So.
Yes, there you go. Good-looking clone, though, eh?
Oh, yeah.
Let me tell you. Good-looking clone.
No, but you know what I mean? I think it's great for first-time home buyers. It's exactly what first-time home buyers need. I mean, we'll talk about next week's episode, next week's show.
Yeah.
We'll talk about what I think is going to happen in 2026 and what needs to happen. Because Tiff Macklem made an interesting comment when he made the last Bank of Canada rate announcement in October, or the second last one, because there was one in December, obviously, earlier this month. Yeah. But he talked about, okay, I think I've done my part. I've got the rate back to neutral. Now the government needs to do their part. Maybe what the government needs to do is amend some of the mortgage rules that are out there to make it a little easier for first-time homebuyers to get back in the market, because it is extremely difficult. And I've gotten calls from single individuals who don't have a partner to buy a house with, and they're making good income, and they feel like they should be able to qualify for a home, but it's very difficult because we still have a stress test in place, which includes 2 percentage point above the rate that you're getting on your mortgage. So whether you choose a variable, a 3-year or 5-year, it doesn't matter. We got to add 2 percentage point to whatever rate we get you to qualify you. And that normally gets people away, a single person away from qualifying. It gets them into the unqualified space really quickly.
The other thing that happened this year too was trying to get new home builders more shovels in the ground.
That was one of our big conversations through the year. Yep.
Through the year, it was a huge conversation, and it didn't really happen. It really didn't happen. I know they keep talking about it. I feel like they've talked about it for, probably 5 years, getting more shovels in the ground, but they're way behind the curve. So, we have a lot of immigrants coming into the city. We have people coming from even Ontario, like Toronto. They're realizing how affordable Ottawa is. I mean, we're seeing it all the time. We get a lot of Toronto buyers here because of affordability. Problem is, we have tons of land here in Ottawa. We don't have builders building, and that's a big problem too. And I hope with this Bill 60 that we will get more homes in the ground. More shovels in the ground, more homes built. That'll be very, very important. That bill will be very important to make it easier to get shovels in the ground and make homes more affordable as well.
Which makes a lot of us scratch our heads. If this was started in May, why is it taking so long to pass? If it's such a good thing for builders, for jobs, listen, homes that are being built create a lot of jobs. It is an economic boom for a city when there's a lot of homes being built on so many fronts.
Tax dollars. Look at the tax dollars.
Apart from tax dollars, but the jobs that are created, because now you got people building homes. Now you're buying materials, which again, people are making those materials. Yeah. So the economic boom that comes with
home building
is massive. Yet they started this in May and still we're into December and going into January and possibly into February before. Why does it take 9 months for something that makes so much sense? Like it does make us scratch our heads and say, why? Like, what's the intent? Why are they taking so long when they come up with such a brilliant idea? So what they did is they got fanfare. It was around election time, just after election time, say, hey, here's what we're doing.
Right.
Maybe it offset what they're doing with the tariff because they're not getting anywhere with the tariff. So here, let's find some good news. Makes you ask those questions, like this is what they're doing it for, because it should not take this long to pass. And then the next part is I think the cities need to get involved with developmental fees and lowering those a little bit. So there's even more enticement, not only for builders, but for first-time home buyers to get in. And we do it. And honestly, a lot of people say to me, wow, you guys talk about things because it's what's good for your industry. No, I think Paul and I are very careful in the fact that we want what's best for the city. We care about the city. We want people to have jobs. We're scared about unemployment moving forward. I'm worried about unemployment in 2026. I really am. I think that some of the job numbers that have come out over the last 2 or 3 months feel fake. A lot of part-time jobs have been gained. A lot of full-time jobs have been lost. I feel for what those job numbers are going to look like because they're going to greatly impact our economy here in Ottawa.
Have a question? Head over to realestateandmortgageshow.com. We'll be right back. Welcome back to the show, everybody. Just a reminder, if you have a question, head over to realestateandmortgageshow.com, submit it there, and we'll get that read on air next week.
Our last segment.
Last segment of 2025.
Wow.
Here we are.
Yeah.
So, Paul, sorry, we had to finish that last segment. You had something to go on the development charges we were talking about.
Yeah, we were talking about, like, it's like the left doesn't talk to the right. Like we've talked about the federal level, we've talked about municipal, we've talked about, it's just left doesn't talk to the right. So they're pushing for more homes, they're pushing for shovels in the ground, they're pushing to get more builds because we have so many people coming into this country and into this town, and then all of a sudden they jack up development charges in certain areas, like we talked about before in Rockland. They've doubled their development charges, like a permit now has gone from like 25 to 50. Like I don't get it. So I don't understand how the three levels of government aren't talking to each other when you have pushing for homes and then you have the municipalities jacking up development charges.
Well, and it was fascinating too, like in provincial elections in the last couple of years, federal elections in the last couple of years, and even municipal, all three levels of government have talked about the housing affordability problem, so it is clearly there. It's not a partisan issue.
But do you ever listen to those people and say, oh, this is going to happen? I listen to those people and I'm like, oh, there's why we want to get elected. Eh? Like it's all fluff. It's all total fluff. But it's frustrating because we talk about, even though our average sale prices come down, we still talk about affordability because prices are expensive. But we can't make things more affordable if we don't have more homes. So the federal government is trying to make that happen. The municipalities are preventing that from happening. And I don't understand how the three levels don't just have a chat,
Right. So do you see where that will make different municipalities kind of work harder to attract builders into their municipal? So if I don't want to pick on Rockland here, but if Rockland's doubling their development charges, will Charles go somewhere else?
Well, look at in Rockland. You got some big builders. I mean, you got Charles from Clement Homes. You got EQ. You have a bunch of big builders there and some medium-sized builders. You start jacking up development charges, they're moving their business. Like they're going somewhere else where it's cheaper to build and where it's more affordable. Because let's be honest, the builders aren't absorbing this. They're passing it on to the consumer. So,
sure, of course.
You double the development fees, and now that $500,000 townhome is now $525,000. So, and what's going to happen there is like, $525,000, I could go over to this community and get it cheaper. So I'm going to go over to this community. So now the builders are suffering because of it. So I think doubling, okay, how about you raise a tiny bit if you're going to do something, but I wouldn't do anything. I'd be lowering them. I'd be eliminating. I mean, You see what some of these states in the United States are doing. I mean, Florida's eliminating property taxes altogether.
That's an interesting concept, but anyway, I don't think that's ever going to happen. But if I'm
either.
if I'm a builder, and I see that this municipality, and if I'm the next number one, if I'm the mayor of the next municipality, it's like, hey, come build in my municipality. I'm going to waive development charges if you build in my municipality.
Why not?
Well,
And then that makes a lot of sense. So, but I don't think we see enough of that. I don't think we see communities doing that, and I think they need to do that. I think it's time for them to act as business people as opposed to politicians and do what's right for the community itself.
well, not to turn it into a political show, but
No.
I've always been a fan of term limits for politicians. I think a lot of politicians just think about the next election cycle right away. So it's very hard to concentrate and get some of these things done and push through.
Yep, agreed.
I'd say.
Agreed.
Yeah, agreed.
So-
Agreed.
Anyway, all right. So one of the other topics we talked about a lot this year was people, as we talked earlier, coming off those low
interest
mortgage
rate.
rates. Did you find this year you're talking to a lot more people about consolidating
100%.
payments, high interest?
100%. And again, there's some people out there that don't realize some of the options that they have within their mortgage. There are mortgages out there where your bank may not do it, but if you have what's called a collateral mortgage. So a collateral mortgage is where a bank registers the charge as collateral, which means it doesn't have an expiry date. You might have a 25-year amortization, but because they register it as a collateral mortgage, on the registry system, there's no expiry date, where your standard mortgage has an expiry date. If you choose a 25-year amortization, you get the house in 2025. In 2050, that charge comes off the system, the registry system. So therefore, you have to go by it. If you have what's called a collateral mortgage, you can, if your bank won't let you increase the amortization back to 25 because the interest rates have gone up and you want to try and keep the payments the same, you have the option to go to another lender, call a mortgage broker. We'll set you up with another lender that will allow you to go back up to 25-year amortization and keep the charge the way it is so it doesn't cost you anything. So it's basically a no-cost switch. So again, know what your rights are, know what your options, and don't necessarily take the word of your bank or whoever you're dealing with that that's the only option you have, because they're only telling you what they want you to know based on keeping the business with them and not necessarily some of the rights that you have to move your mortgage elsewhere.
Right.
Do what's best for you. And I know that we've caught a lot of clients that are in that scenario where the bank said, nope, all of a sudden now, because it's no longer, because you want to increase the amortization, we code it as a refinance and the interest rate's 1/4 to 0.5% more. You don't have to pay that.
Right.
Don't believe what your bank is doing. So again, I mean, I think we've seen a lot of them in 2025, and we expect to see many, many, many more in 2026. And that's the advice that we're giving clients. That's why we're trying to reach out 4, 5, 6 months in advance to our renewal customers and saying, number one, your bank may try to entice you to early renew your mortgage. You're at 1.79. Why?
Yeah.
There is no reason for you to give up to 1.79 now. Is there a threat of interest rates going up? It's always there. The chances are always there,
It's
but
possible.
they're minimal. But they're minimal, and it's certainly not worth giving up 1.79 for the next 4 or 5 months. I don't think that makes a lot of sense financially for you. That's for the bank, not for you.
Right. Yeah. The bank has their best interest
they do.
in mind. And
Hey.
we talked about that a lot this year. And I think one of the things that came out, and this is for both the real estate and the mortgage side, is it doesn't cost you anything to ask a question.
Doesn't at all. Nothing wrong with calling a real estate agent, getting an opinion. There's many times I have clients, and I can tell you, I can show you emails where a client will write me and say, Frank, my bank's offered me this. Or the ones that I don't like is when, Frank, my bank said that if you send me something in writing, they'll try and match it.
Right.
On those ones, I say, wait a second. So they have something better, but they don't want to give it to you unless you can find something better. Is that really who you want to work with?
Well, a couple weeks ago, I actually talked about this on air, where most people are, when they're interviewing agents, the first thing they're asking is, what's your commission? Yeah, and I'm like, it's the worst question you could ever ask. Like, I mean, like, how cheap can you go? No. How good can you be is what you should be saying, right? And I talked about it a couple weeks ago, so I won't talk about it again. But yeah, get a couple opinions, but ask the right questions. Ask the right questions.
And listen to what that professional is telling you and feel whether they have your best interest at heart or whether they have their own best interest at heart. And if they have their own best interest at heart, it's probably not who you want to be working with. So,
And get a second opinion.
Get that second and third opinion. This is your mortgage. This is your house. This is your biggest investment that you have.
You
your
know
biggest
what?
debt.
The people that are in it for themselves. They're coming from a position of scarcity, right? They're just they need that commission. They breathe the commission breath. They have commission breath. That's not the type of person you want. You want someone who comes from a position of abundance, someone who's not just doing the deal to make money off you, someone who's doing the deal to help you. Because once you help someone, it comes back to you. It comes back to you, and they use you again. And so do their parents, their kids, and everyone uses you again. Position of abundance is who you want.
Well, and that partly what we talked about earlier. People still want that human touch, not the
of course,
that
course.
Good person. All right. That's it for 2025. Next week, we're going to do our predictions episode.
I'm looking forward to that.
For 2026.
And you know what? I thought about this before the show today, and I thought, you know what? I have to have a really good New Year's resolution this year. And my New Year's resolution this year is I'm actually going to be nice to Frank next year.
Wow.
Actually, hold on. That's a joke. I'm really not. I'm really not. So
wait. Frank sent me a prediction this year. He's got an over-under going on
125. How many times are you going to say, I agree with Frank, or Frank, you're right?
Frank, you're right.
2026. 125.
I don't think that'll ever come out of my mouth in 2026.
And the money's on over, by the way. So,
All
right.
Birthdays, Frank?
Yeah, birthday's Jennifer Anderson from AMIC, or with our Mortgage Brokers Ottawa family for 18 years, almost since day one. Celebrates her birthday on Christmas Day. She gets to celebrate Christmas and her birthday all at once. So happy birthday to Jen, and Happy New Year to everyone. Please enjoy, be safe on New Year's Eve. 2026 hopefully is going to be an awesome year for you.
Yep. Happy New Year. Wishing everyone love, health, and prosperity.
Happy New Year, everybody. We'll see you in 2026.
And continue to support local business charities, everyone.